a 4 to 5% rent increase is there every year.
This makes India the fourth largest market in the world for office space, behind the United States, China, and Japan.
So I think, is it a big step, major step? It's a huge step.
Commercial real estate was not something you could invest in at all unless you are actually starting your own office or company or something like that.
REITs are a very unique instrument because it depends upon an occupied commercial property earning rent and giving it to you back as dividend.
So even the work culture is changing so much. So yes, commercial will always do well and will always have a demand, but will it spike up a lot?
See, I think that is what really kills an industry.
Welcome back to another episode of the News Roundup with Crop News Time. Here, we sit down with industry experts and discuss the latest events and news in real estate, in India, and across the globe. With me today is Mr. Balaji Rao and Abhay Rao. Welcome to the show.
Thank you.
So today I want to talk to you about how India's office stock is set to reach 1 billion square feet by the end of September. This is valued at approximately $187 billion. This makes India the fourth largest market in the world for office space, behind the United States, China, and Japan. Now, as of August 2025, in India, the REIT eligible office stock is estimated to be around 520 million square feet in the top 7 cities. Now, only a small portion of this entire stock is actually in the form of REITs. We have 4 REITs in India currently. One is a retail REIT, and we have the 5th one that is going to launch a little bit later this year. We've already been talking about it, the Knowledge Realty Trust. My first question is, REITs as a category, do you believe it's growing from strength to strength?
Yes. See, what you have to understand is India's commercial property, we add on roughly around 50 million square feet every year, 10 additions. It's leased out, it's added on. There's further more supply coming in, which is vacant.
Right.
So all in all, we have been really growing pretty much in a strident way. It's not even steady way to reach. And as you are saying, as per one of the reports, we might hit 100 million mark, 100 billion mark very easily. So 1 billion square feet, maybe at 187 billion or 200 billion. So that means roughly it translates into, as we discussed, $1 a square foot.
Yes.
Is a very ideal sweet spot.
Yes.
Okay. Now, when you have 1 billion square feet, 1,000 million square feet, and what has been gone into REITs so far has been 130. If I add the 50 of Knowledge Realty Trust, it will be 180. It's still a very small percentage, 80, 20%.
Yeah.
Okay. Of the overall market. And the REITable stock might be much more, 500, 600 million square feet of good grade A space.
Correct.
What are REITs? REITs are a very unique instrument. And so even SEBI and mutual fund industry took some time to understand the nature of this animal. Because it depends upon an occupied commercial property earning rent and giving it to you back as dividend.
Right.
So to a large extent, the dividend is known. Okay? Because when a REIT,
It's a longer term lease, right?
Everybody has looked at the yield at 6%, 7% out of it. So the dividend is known that that's the sort of a rental which will come minus expenses. He will get a 6%, 7% yield.
Right.
Okay. So is it just a debt instrument of 6, 7% safe because it's a physical property? No. Why? Because the underlying asset is appreciating.
Right.
It's not a depreciating asset.
Correct.
Okay. So if the underlying asset is appreciating, how we know it is appreciating is simply because the rent increases take place regularly. There is always in commercial property a 12 to 15% rent increase every 3 years.
Okay.
A 4 to 5% rent increase is there every year.
Okay.
This is kept as an inflation hedge.
Okay.
Okay. So when you are, that means that 4-5% you're not getting it as a yield because
Yeah.
that's 6-7%.
Correct.
That 4-5% is a capital appreciation.
Correct.
So this is not just a debt instrument because there's a capital appreciation.
Correct.
If I do a term deposit or a fixed deposit, it's a debt instrument.
Yes.
I get only a fixed return.
Correct.
The principal doesn't increase.
Correct.
Correct? So here the principal is increasing.
Mm-hmm.
So you can get up to 11-12% maybe.
Correct?
Yes.
So you're getting an overall a double-digit return.
Understood.
Okay. So to an investor, though it is not some heavy multiple, it's not that he's punting on a stock which will double itself in 6 months. No.
Yeah.
Those are high risk, high reward stocks.
Mm-hmm.
It is a good defensive stock, what we used to call,
Right.
which gives a good return and has a good growth, a decent growth every year, so that the investor feels that all my equity capital market exposure need not be skewed towards high risk, high reward.
Okay. So when you say a defensive equity stock, you mean it's fairly stable, it's well
It's very
balanced.
stable. It is nothing to do with, whether the product will fail or the service is not going to be taken or there'll be obsolescence or, suddenly imports will flood and this market will shut down. So it is nothing to do with that. It's a solid rock
Yes.
which has people staying in it and paying rent. And he's taking the rent, counting it, subtracting expenses and distributing.
Understood.
Okay. And it's appreciating.
Understood.
So it's a very, almost an ideal instrument. One, it is a very good instrument for seniors and for pre-retirement, post-retirement, because it gives you a good return.
Correct.
It gives you a yield as well as a slight appreciation. So it's a very ideal investment for them. Even for a younger person who can take risks, because the younger you are, the more risk you can take, they are saying.
Yes.
Even for a younger person who can take risk, it's very good because your entire portfolio need not be made up of only those stocks where you're hoping to double, where you're hoping to get some fancy 40% return and 22% returns and 28%. Yes, you keep a certain percentage of your portfolio betting on those.
Yes.
But you can also keep the base of your portfolio in defensive stocks,
Understood.
which are well established. And REITs, I think, fall into that category because it is so well secured in a way.
Now, even though REITs is part of the capital market, it's in terms of your personal investment portfolio, it is suddenly giving you exposure to commercial real estate. Now, for a common man and a regular investor, that was not something really possible earlier.
Yeah.
Pre-REIT, it was commercial real estate was not something you could invest in at all unless you are actually starting your own office or company or something like that. So this allows a lot more people to take part in the commercial growth of the country.
Yes.
Instead of keeping it only to a handful of players like it was earlier. So in a way, REITs will not only improve the supply quality, I feel people will start also looking at markets and equity, stock, all of that a lot more differently. They'll start looking at it more as building an investment portfolio and not just as I was saying, not just a one-dimensional investment portfolio, but you start thinking of actual things like exposure, inflation, hedges, and stuff like that.
The Indian office space, the boom that's taken place, largely the absorption that's taken place has been largely due to GCCs. Now, in the Indian office space, there's a couple of advantages that I'd like to highlight. We're very affordable, like you said, we're just under $1. We are also high quality. More than 50% of our grade A supply is grade A. And where, again, majority of our office spaces are ESG compliant. So it makes us a very attractive market for all these reasons, there's also a lot of interest now with these, big institutional investors coming in.
Majority of our office stock is not ESG compliant.
Okay.
What is ESG compliant is the new supply coming in.
Okay.
We believe will be significantly ESG compliant, maybe 60-65%.
Okay.
Okay. But the old supply was not ESG compliant.
Right.
So there is a movement which is known as B2G, brown to green,
Right.
where we are going into the brownfield development and figuring out how to make them more greener.
Through retrofitting.
Yes. Because we believe the future, the tenants will be very, very concerned about the ESG norms.
Right.
And they might not want to stay in non-green buildings.
Right.
Correct? So if that happens, then it's essential and it is very critical for all office buildings to be green in a way.
Right.
So because that will become the absolute hygiene factor, what we call. As far as Grade A is concerned, also most of the Indian buildings, office buildings, are as good as the buildings abroad.
Right.
See, wherever there's a corporate building,
Yeah.
if some of the large techs like Apple, Google have their campuses, they'll naturally be out of the lead because they that's a corporate building. So you're doing a lot more stuff there. But if you talk about a regular office building,
Yes.
we are as good as it gets, with all the security, safety, hygiene factors. So we are Grade A to that extent, barring here and there. We can say our setbacks here are bad or something, but I think we are very much there. So I believe in the overall global office scenario, as you say, we will become the fourth largest behind US, China, and Japan. And wherever they have become, there'll always be REITs which are following. Like in US, there are REITs, quite a few there are actually. I think, I'm not mistaken, there are 200 plus REITs. In Japan, there are REITs, they're known as J REITs.
Okay.
China has REITs. So we will also be a good big REIT market.
Right.
But as Abhay pointed out earlier, previously you could not take exposure to commercial property unless you bought office space on a strata basis.
Right.
Like in Nariman Point or something, people who cannot place, people bought office space on a strata basis. He bought 2,000 square feet and rented it out to some insurance company.
Correct.
But today when the things have shifted, as you rightly said, to the GCCs and larger players, you can't buy 50,000 and rent it out.
Correct.
It's not easy. So institutions stepped in, insurance companies. So now that space is being more democratized, what we call.
Right.
Okay. Where you'll have a lot more players coming in to partake in it, even with as little as 15,000.
Yeah.
So with 15,000, I am partaking in the commercial property economics, appreciation, yields, dividends, without having to put in 150 crores.
Understood.
Okay. And it is great because it is being funded as well as being looked after by a good manager.
Right.
REITs are in the hands of professionals.
Yes.
So it is not being done by the developer. In fact, the developer might have moved out and the REITs are being run by professional managers who step in and run it the way it should be done.
Right.
And so the life of the building, the way it can be sweated out, the building.
Right.
Like for example, in many commercial buildings, there's a lot more revenue made out of parking as well as signages, which people don't realize. We understand. So it's not just making it out of rentals. So there is a lot more scope, opportunity to gain in a REIT because now you're getting in. But you're only talking about commercial REITs. Soon you will see like a broad residential REITs. When I said residential REIT, when real estate becomes a service, when people start having co-living and service departments, student housing, assisted living, senior living, you will see that those will again become institutionalized and can form REITs.
But for that, our rental yield has to go up, right? For residential real estate to really become meaningful.
Because a service, it will go up. Today it is 3%, it will go up to 6-8%. As it is, we have seen that.
But again, just like co-working and flexi-working is more expensive than commercial real estate, by and large. Similarly, service departments, hostel, living, assisted living, those places are more expensive, even rental yield-wise. So so they will automatically generate also a higher yield and hence attract more capital. At the moment, those are very minor markets.
Right.
But
It's muted and it is only done by individuals so far.
Yes.
Locally. But see, wherever there is a strong operator,
Right.
so we call it in our investment terms, there is a propco, we call it. Propco means it owns the property.
Okay.
There's a devco. Devco means it develops the property.
Okay.
Then there's an opco. Opco means it operates the property.
Okay.
Okay. So these three are three different animals. A
Right.
devco will develop it, align themselves with an opco,
Yeah.
and then they will go to a propco who will then step into the shoes of the devco.
Right.
And the devco disappears. This is exactly how a REIT, commercial REIT also operates. The
Right.
devco will disappear and the propco will start owning that property
Right.
and running it with the opco.
Understood. Yeah.
If you look at a hospitality business, when you see all the hotel brands like a Marriott or a Hilton or a Hyatt,
Yeah.
they are not all owned properties.
Correct.
They are only managed properties, correct? So he's the opco.
Yeah. Yes.
Okay.
A married
The
would be an
property can be owned by somebody else,
Yes.
correct? So that propco, then if it wants to expand in its size and scale,
Mhm.
then becomes a public limited company. It floats its issue. That is why you had hospitality companies coming in.
Yes.
exactly. The reason we have hospitality doing this and hospitality offshoots getting into this is because of the operational bit of it. So basically on the operational front, it's easier for hotels to do it because they already have the operations in place. Similarly, even most of your hostels and all are being run by people who are already doing restaurants, canteens, things like that. So they have a certain amount of operations already in place. So as more and more opco companies come in, then maybe we'll see a lot more service departments, hostels, and all others as they'll come out.
One of
That was the only part that was
one of the impediments of the growth of
Yes.
service residential real estate
Yeah.
have been the lack of operators.
Right.
You understand?
Yes.
Because it is very difficult even today with senior living.
Right.
This is a big potential market. You find it difficult,
Right.
So you will need some support, whether it is of a hospital,
Right.
or whether you need it of a hospitality business, like
Right.
he said, like you need some big hospitality names who are good at servicing, or in students' hotel, those who are running hostels who will be able to do it. So as of now, it's very fragmented,
Right.
but they are also slowly merging and amalgamating, and good people are emerging out of
Right.
it. That is the future. I feel any operator-driven real estate
Right.
moves towards a propco-opco model.
Mhm.
And any propco will need capital.
that is when REITs come in.
You understand?
Yeah.
So, and a REIT will be formed around the propco because these people know that there is an opco who is operating it
Right.
and they're doing it. In a REIT, the opco is not there. They themselves manage the properties. But in a residential, sometimes you might find an opco is outside
Yes.
who is managing it and he's just owning the property.
Right. Well, you have these big players from Canada, from all over the world that are now investing heavily in senior living in India. You see a lot of these projects propping up, especially down south. We'll see more, but specifically in the last couple of years, we've seen a lot of inflow of investments even from.
Because if you see hospitality majors,
Yeah.
they're all going to go asset light, they say. That
Right.
means they're shedding their own properties.
Uh-huh.
And they will only want to manage. That means they're saying we are very specialized, skilled operators.
Right.
We don't want to own the properties. So who owns the property? Then the property has to be owned.
Right.
Sometimes it's owned by a devco,
Right.
but usually doesn't want to keep it long term.
Mhm.
So they usually will turn it into a sort of a
REIT.
REIT or a hospitality company that goes public.
So way they monetize their real estate assets, they exit that and then
You
focus
have
on
to
the.
exit that.
Yeah.
Do you see a price correction happening in commercial real estate as we get more corporatized? Right now, we're very affordable. As we get better through retrofitting, through other incentives to to other actions. Sorry, not incentives.
Maybe the average price might increase as more and more, like you said, retrofitting happens. Grade B starts coming towards grade A. So that might increase the average price. But otherwise, this commercial real estate prices will shoot up more than they have been over the last so many years. I don't think so, because it's not like ever all the growth is only going to be office-based growth in India, in a country like India. The economic development is there, but it's across all sectors. So just like we were discussing even today, right? It's not only going to be offices. There'll be flexi offices. There'll be work from home situations. There's right now just reading. One more country has started offering nomad visas. So even the work culture is changing so much. So yes, commercial will always do well and will always have a demand. But will it spike up a lot because of the financialization and the modernization of it? I don't think so. In India, it should have that big an impact. Like I said, maybe the average will go up because more and more will start going towards grade A. So you might not find so many cheaper offices after a while. But that is the only thing that will increase the average a little bit.
See, overall, what you're saying is right, Abhay, but I would have a sort of a different approach.
Yes.
See, if you look at office rents,
Yes.
your average is $1.
Yeah.
That's because there is all over the country and all over the places. But the same thing at the upper end, it can go up to $10 a square foot also.
Yes.
Correct?
Yeah.
So there is already a range. So it will depend where you are and it can get re-rated.
Right.
Like for example, in Bombay, the CBD was the fourth area in Nariman Point, having the highest rentals.
Yeah.
Today it is the
BKC.
BKC. Tomorrow it might be somewhere else.
Fair enough.
So they will re-rate. That's one way. The second way of looking at it is any real estate appreciation happens due to land.
Okay.
Actually.
Yes.
Because actually a building doesn't depreciate. No?
Mhm.
A building is a depreciating asset.
Right.
It has a life of 50, 60 years. And we actually, even in accounting, we depreciate it by 2% of annum.
Okay.
So it is depreciated.
Okay.
But the land is appreciated. Okay. Because why does land depreciate? One, of course, you can go as per Twain to say we don't make land anymore, which I don't believe in, because as I just explained, I believe land appreciates because of its connectivity, infrastructure, and gentrification.
Understood. Yeah.
Okay. So today we are talking about BKC as a jewel in the crown.
Right.
Correct.
Okay. If I take you back 25 years, you wouldn't have gone into BKC.
Yes. Yeah.
Okay. Because the only things which were there 20 years back was basically the government offices, income tax office and everything.
Yeah.
There was no BKC. The swamp.
Mhm.
So the question comes is you connected it, you infrastructured it, you planned it well, and you gentrified it. That means all the best BFSI, banks all rushed into that place. Insurance companies came in. And suddenly it becomes, it's like how Canary Wharf reinvented itself in London.
Yes. Yeah. I remember.
Otherwise, it was just a mine
Yeah.
in London.
Yes.
Canary Wharf reinvented itself. New York is reinventing itself because of the Hudson Bay development.
Yes.
So you will have a reinvention also, which re-rates it.
Okay.
So land appreciates.
Okay.
And if land appreciates in a particular area, then everything will appreciate. The
Right.
price will appreciate and the rental will appreciate. Because I want my still 6%, 8% yields. No?
Correct.
So if the value increases, it will be that.
Automatically you will get.
BKC is so expensive. Connaught Place is so expensive because the land price is expensive.
Okay.
So will land appreciate? Yes, it can appreciate.
Next, I want to discuss the Supreme Court's recent judgment on environmental clearances for real estate projects. So I'm just going to highlight a few things and then we can, talk about it one by one. First, the Supreme Court has cleared the confusion regarding what kind of projects need to secure approvals. Earlier, there was some confusion about projects that were larger than 20,000 square feet. Now, it has said that all construction projects, including industrial sheds, institutions, hostels, must secure environmental clearance. There's no reason for them not to. It has also clarified that the state authorities are responsible for issuing the approvals. This is your State Environment Impact Assessment Authority. There was, again, some confusion earlier due to an NGT ruling, which said that you require some central level approvals as well. The Supreme Court has clarified that. Right? The Supreme Court has also mentioned the areas that state governments have jurisdiction over in eco-sensitive zones, fragile zones, wildlife zones. So first, the first thing I'd like to talk to you about is that there were a lot of projects that were in limbo for the last year. In MMR alone, we had almost 2,000 residential projects that were stalled on account of these clearances. So how do you see things moving now that we've got the clarification?
See, EC, what we call this in the industry, EC, environmental clearance, has always been one of the most difficult and challenging approvals to get. Okay? And it has been constantly been kicked around between state and national level.
Correct.
Okay? So this Supreme Court judgment, I think, clarifies a lot, and it is extremely welcome by the industry.
Right.
One, it clarifies first that most of the clearances, if not all, can be done at the state level.
Yes.
Okay, it's only when it is in category A does it have to go to the central level, and category A are very different types like mining and large industrial complexes and everything. All category B can be done at the state level. That's the first clarification, which is a huge welcome, because to do it from the state and then go to the center and come back, it's nightmarish. It was.
Right.
More than nightmarish, it was taking a long time.
Right.
Okay. So I think that's a big relief.
Right.
It also clarified that you cannot exclude educational institutions and so on and so forth to say they don't need it.
Correct.
They said everybody needs.
Right.
So that's another big relief. The third, they said, is just because the eco-sensitive zone, you don't have to go to center.
Yes.
You can do it at the state level, even if it is an eco-sensitive zone, state has to clear it.
Right.
So our environmental impact assessment studies, which we do, now goes to the state level. Supposedly it should go. They should clear it. And whatever the parlays which happen in order to change it or do the right things, we will have to do it in order to get it going. So I think, is it a big step, major step? It's a huge step in my idea. And a lot of projects, not just in MMR, but all over, they were all stuck because of this confusion.
Yes.
Because some were at the national central level, some were trying to push it at the state level, some were trying to put it below 20,000 so that they don't need it, green clearance or EC. So I think it's going to really clear the air about it.
Yes.
And the only thing we need to further streamline at every state level, because it's not just Maharashtra or anything which will get. At every state level, we need to further clarify that what is the procedure, protocol, and process to be followed.
Okay. Understood.
And especially we need time-bound sort of comebacks.
Right.
Because usually the meetings are held only once a month or so. We wait for a long time.
Right.
1 month it might not be held and you're waiting for him to take it up. We will have questions. You put the question and it will be taken up in the next meeting. So somewhere we'll have to streamline this, like we get the rest of the approvals for projects, where it's a continuous ongoing basis.
Right.
Can't be taken only at a one meeting level. So I'm hoping that the next step which we will take, and all progressive states should adopt a very standard operating procedure to get ECs.
Right.
Okay. Because everybody knows what you want.
Yeah.
And secondly, what is the big thing of doing an EC in a large industrial park, for example, which is already there, or IT park? Why do everybody has to go for EC?
Right.
He will look at a few parameters, no doubt. But besides that, does it really require too much of intervention is what we have to see.
Right. So like how we have our building approvals and all that have gone online, that have been streamlined, standardized.
Correct.
Ideally, the future for this will also be something similar.
Correct. And I believe with the digitization of the cadastral maps, what will happen is all your water bodies and eco-sensitive zones should be identified. We should be clear what is the setback from those areas.
Yeah.
And so that even the architects know exactly what they're looking for.
Yes.
So that you don't have to try and push something, get a sort of a blowback and again go back and not take 6 months for EC clearance.
Understood.
Because this is really costing people.
Yes. Yeah.
We've been pushing towards the single window clearance system in all forms of corporatization,
Right.
So even in real estate has been taking a big push, and this is one of the biggest because it actually now gives the power to the states, which means each state can act accordingly as per its needs and requirements.
Yeah.
And it won't just be environmental. Soon you'll realize it's actually going to be so much easier for overall infrastructure planning as well, as they're realizing in places where the infrastructure was not planned and real estate took a bigger boom, whether it was parts of Bangalore or parts of Pune, and infrastructure is now trying to catch up and make sure things are somewhat more balanced. All those issues will also come down considerably going forward, because the minute there's a single window, that means you've already planned out and demarcated what can be built in which areas, and if we fall within those, why should there be an unnecessarily discussion over it?
Thank you. That's a wrap for this week's episode. Thank you so much for tuning in. Don't forget to share your thoughts and feedback in the comment section below. Hit the bell icon for regular notifications. Don't forget to follow us on our social media handles. Until next time, thank you.